Welcome to Plain Money. Today we'll be explaining what is salary sacrifice. Salary sacrifice is when you give up some of your gross salary and receive a benefit instead. Doing so reduces the amount of income tax and national insurance you pay. In the UK, the benefit normally comes in the form of one of three things: pension contributions, company car schemes, and cycle to work schemes. Let's take a look at an example based on increasing pension contributions from 5% to 10% with a salary of £40,000. Your salary is still the same, but you agree to let your employer take £2,000 of your pre-tax income. Due to the tax savings, you'll only lose £1,440 out of your pocket, which means you've essentially gained £560 that you would have lost to tax otherwise. Paying extra into your pension is a great idea, but since you can't access it for a long time, you need to strike the right balance between disposable income and investing for retirement. Now let's look at the salary sacrifice company car schemes. Again with a £40,000 salary and based on an electric car worth £50,000. You'd have to give up £6,000 of your pre-tax salary, which would equate to £4,620 out of your pocket. That sounds like a lot, but you get to use a brand new car with insurance and all maintenance costs covered. If we compare that same car on a private lease, you would save £3,180 per year. So on a like-for-like basis, the scheme is a very wise choice. But it's important to use a take-home pay calculator to make sure that the company car you plan to take makes financial sense in your situation. Now let's look at the cycle to work scheme. Again with a salary of £40,000 and based on a bike that costs £1,000. You'll have to give up £1,000 of your pre-tax income. This will get spread over 12 months. You'll pay £720 out of pocket. If we compare this to buying the same bike elsewhere, you've essentially saved £280 and also got a £1,000 loan at no interest. Finally, let's end on some tips relating to salary sacrifice. If you're a higher earner and earn more than £60,000, you are likely to be paying the higher rate of tax, which is 40%, which means you'll save even more via salary sacrifice. If you want a company car, make sure to check the benefit in kind value, which actually adds to the tax you pay. Electric vehicles, like in my example earlier, make financial sense still, but hybrids are becoming borderline and combustion engines don't make any sense at all anymore. And also, if you have student loan debt, you'll save an extra 9% or potentially even more depending on which loan you have, and it's the only legal way you can avoid repaying student loan debt in the UK. Thank you for watching. Make sure to comment if you want me to cover any other topics and please subscribe.